the whole thing is, if you want to reshore, if you look at Greenland, the whole podcast was, if you look at Greenland, who's he talking about? Greenland, Canada, Panama. He's basically protecting the United States. Monroe Doctrine meets Manifest Destiny.
Friday, January 10th, 2025, Monaco 64, home of alternative economics and contrarian views. Today, I have the pleasure of speaking with Vince Lanci. He's a commodities trader. He's an adjunct professor of finance, and he's also got the Substack goldfix.com. Vince, thank you for coming on the channel.
Yeah, thank you for having me on. I'm happy to have finally put a face on the account.
Thank you. And yeah, it's interesting that we picked today, January 10th, Friday. And why is it interesting? Well, because we had the jobs data, which were strong, and I usually would have expected gold and silver to have been hammered quite sharply downwards. But as I speak here, Vince, and as we talk to each other, I've got spot gold around 26.90, which is up about $20, and
Yep,
even silver's holding. It's up 22 cents at 30.34. But
that's
then,
right.
yeah, we've got the Dow down 600, Nasdaq 100 down 350, and the S&P 77. So how do you see these numbers?
Yeah, it's funny because I think the timing of this conversation, which by the way, I apologize, I'm an hour late for, the timing of this conversation is actually fortuitous because it kind of makes me want to double down on a speculative position I have right now. And so I'll address that answer from, I think, what we all are thinking in the big picture. And in the smaller picture, behaviorally, I think today is very telling. It's a very telling moment. So big picture, which, I think most people in our sphere of influence understand that now. But the big picture is the data was bearish for anything that needs easy monetary policy. So, right, stocks sell off, bonds, depending on how the market perceives risk. In Great Britain, you guys understand that right now, with your currency and your bonds getting roiled at the same time. Gold and silver, even though they are not equity based, have considerable leverage in them, and so historically, par with the correlations that we all observe, they will go back off in sympathy with a strong dollar, especially silver and copper. Copper's not precious, but very important for this conversation. But what we're seeing today is we are seeing actually an extreme moment of what's been going on for the last 2 years. It's kind of like a microcosm. Now, with the exception of the stock market's soft, but you have basically a stronger dollar and gold and silver ignoring it, right? And in combination, it makes it less crazy when you say, oh, look at that. Or maybe more crazy when you look at bonds and you say, oh, bond yields are going up too. So that makes gold even less of an enticing asset to own because of the opportunity cost associated with it. And yet it's ignoring weaker bonds and stronger dollars. And I think that's because, just to tie the big picture together, the world is different now in the sense that we're no longer concerned as much about our return on capital as we are as return with capital. It's trite, but it's a true axiom. And I think in the UK, you see that the most with what happened with trusts. And now what's happening, I still haven't digested it all. But when people are evacuating capital, whether it be from a country or from an asset class, there are fewer things to go into now. I mean, what are you going to do if you sell the pound? You're going to buy the euro? Well, you can't buy the Deutschmark. You have to take the good and the bad together. But that's that. I mean, we're looking at an extreme microcosm of what's been going on for the last 2 years. So I think the timing of this conversation is fortuitous. Now, getting really micro in terms of my trading, I think well, as you said, gold's up 20, 21, $22 in that range. Silver's up 28, $30, and copper is down marginally, but it's down. And we have to ignore oil because oil is just strong. if you look at the three metals as precious and industrial combined for silver, and just industrial for copper, you're getting a picture of the world in the sense that the jobs number came out, inflation is a risk. The Fed's going to hike, or they're not going to ease, or whatever they're going to do, right? So that hits copper. It should hit silver too. Wait, it does hit silver. That's why silver's only up 1%, right? In what's what I'm looking for, at parity with more or less with what gold's doing. However, gold's up, and that's the fly in the ointment today. And here's what I mean. Throughout the past year or two, and I'm referring to central bank buying, central bank and macro discretionary type buying, which has been bigger than the market could handle on any moment, has been waiting for moments of liquidity. So the data comes out, gold gets sold. They go, okay, I can buy 1,000 contracts. They buy. They wait for these windows of opportunity, similar to earnings or Fed Day or Bank of England Day or whatever the terminology is. And what I've seen during those events is you see these V-shaped bottoms starting 2 years ago. Like the market sells off, the data is bearish, and then the market goes up to unchanged. And now what we're seeing, and today's an example of that, is the data is bearish, and the buying that's waiting for this moment of liquidity is overwhelming it. They're selling out there right now. Let's be clear, but now you've got the buying that's become even more impatient than it used to be. And I think we're looking at a microcosm of the next 2 years. And I wasn't next year. I wasn't so confident of that until last month when China, to be clear, when China announced that they're still buying gold. And I went, okay, so we're in the clear, at least for support. So that's my long answer. But thank you for putting up with it.
Yeah, and you spoke about bonds as well, and I see that right now the 10-year yield is at around 475, so up 6 basis points. So it feels also that we're seeing maybe we're going to have a 2025 that's like 2022, where both stocks and bonds didn't do very well, and that was the first time in many decades that happened.
Well, you're referring to 2022 where stocks and bonds diverged, or did
Oh, they
did
both went down quite a bit. Like
oh
bond yields went up and stocks went down. Like the
yeah,
60-40 portfolio had a really bad time.
that's in fact that's right. That was the year where everyone started to declare the bond bull market is over. That's where they really started to lean into it. And I think that's a valid point. The question is, I think, the timing of where you and I look at our snapshots. And to be clear, higher yields in bonds will eventually just crack stocks lower, right? I mean, that's the opportunity cost at the financial side. Forgetting gold for the second. The question is, how much will bonds rally when stocks crack? So what I mean is, like, let's look at. Let's compare and contrast 2008 U.S. stocks with 2022. So in 2022, as you described, stocks and bonds had a bad year, right? It started off with in February, and that's because the Fed was raising rates. But even as the Fed was raising rates, bonds were getting hammered. Gold went down as well. And that's 2022. And as you pointed out, gold versus 60-40 portfolio almost literally broke out. The comparison or it's not necessarily a juxtaposition, but that's like your scenario painting for it now. And I think that scenario could definitely happen. The other scenario, it would be a mini version of what happened in 2008. And that version starts out the same way you're describing. Bond yields go up. That's what we're in right now, right? And stocks hold their own until today, more or less. And then, believe it or not, I kid you not, September of 2008, 2007, I think, 2008, I'm not sure, the Fed cut 50 basis points, unheard of at the time. They cut 50 basis points. Bond yields kept creeping up. Sound familiar? Right?
It was actually September 18th, 2008, and last year was September 18th, 2024. They also
Right.
50.
Right, exactly. The parallels, like, it's crazy. So if you want to take 2008, 2022 and put them together, I think that could happen. So the Fed cuts in 2008, September 18th, as you noted, right? The bond market, the bond yields creep up, stocks make a new high, and then boom, stock market craps out, and eventually, excuse my French, eventually the bond market catches fire and recovers. So the question is, how will the year end? Will it end with bonds weak and stocks in the beginning of cratering, or will it end with bonds strong because stocks have cratered? Either way, the 60-40 portfolio is at risk. I agree with you.
And I'm seeing that the market now is discounting almost no cuts for the Fed. I mean, it went from 4 to 2, but what if things get really out of hand in terms of the markets? Do you think the Fed, how, I mean, how bad will they look if they have to intervene and start QE again, or even start cutting sharply, like
No,
emergency meetings?
that's those are the moving parts that I think we're all struggling with. At least I am. And the moving parts are starting with the geopolitical and working narrower, right? Geopolitically, if I'm Powell and I'm thinking about that, although he's not supposed to, we know that, he's got to say, well, China's in trouble, the UK is struggling, and Europe could use some easy dollars. Uh, I want to ease because of that. And then he looks at our domestic inflation, he looks at our domestic economy and says, I don't want to ease because of that. So that's, I guess, his his geopolitical balance. So, and I'm not predicting, but I'm definitely leaning this way. I feel, based on conversations I've had with some people and based on very indirect communication I had with once last year with Zoltan Pozar, that the the uh, the Fed is not unhappy with steepening yields because they want risk premium to come back into the market to show the opportunity cost commensurate with owning stocks. That's statement number one that I got out of the very brief communication that I had. Statement number two is my extrapolation of that. Powell doesn't want to cut rates. This is current because he wants to go out with a 2% inflation. He really does care about his legacy. Whether he should or should not is a different conversation. So let's assume that he doesn't want to cut rates. And last year was politically driven, as Zero Hedge would say, and I would tend to agree. What can he do without lowering rates, which is the headline? We've lowered rates to not fight inflation, to help other countries, and at the same time, uh, uh, allegedly not cause inflation here, and that is QE. Now they say they won't do QE again, but they will do QE. I know they will in the form of yield curve control, and that's what QE is. And that's something that Pozar said publicly. He said the word was we're in the ante room for QE, meaning when they did BTFP, all those things to rescue. What you're doing is you're keeping extra bonds off the market. And so what QE will do is we're going to get to a yield, right? Let's say we get to 5.25 in US 30-year bond. Let's say we get to 5.25. Let's say we get to 5.5. Bonds are crapping out and stocks all of a sudden take a dive, right? So we have like a trust moment in the US, except that the dollar will go up because everyone still needs dollars. What's Powell going to do? Well, he may lower rates, he may bail out specifics, but he's going to have to stop the yields from going up at the 30-year too fast. And in doing that, he will keep money from leaving the stock market. That money will weaken the dollar, make dollars cheaper for Europe to get. And I believe I'm in the camp now that he doesn't want to ease rates, especially with Trump there. He wants to secure his legacy. And if pressed to, we've got yield curve control, which is a form of QE, in his pocket that will hit the market at 5.25, 5.5. I don't know what the rate is, but there's going to be a level where he says, okay, that's enough term premium. And it's probably going to be when we see a 5% down week in stocks. And then he'll start talking about that. So all in to answer your question more concisely, what does he want to do? Well, he wants the yield curve to keep going up slowly, not fast, right? He wants to be able to reinstate term premium without cracking the stock market, and he wants to not ease rates doing it. So I think yield curve control is on the table. That's it.
Yeah, and Trump, I think he made a comment yesterday or the day before that
Oh yeah,
rates are too high. But
yeah,
I think so. You think Powell is not going to play along with Trump?
yeah. I mean, ideologically, Powell and Trump are different sides. You know, Powell's a neo-Keynesian, and he's no dummy. And Trump is basically a classic corporatist, so he's closer to a Mises person than that. And so it's such a convenient time for Powell to say, I'm not influenceable by politicians. Well, that's pretty convenient, you know. And I think he would do that. And the reason I think he would do that is he's only got a year left. Let's call it a year and a half, right? And this is my timing on the explosion in gold, right? The if he can get inflation to 2% and declare victory, mission accomplished, for 5 minutes, then he's going to feel good about that. And he wants to do that. And he's also being responsible in the sense that Trump's plan is very spending oriented. It's more spending than Biden. Let's be clear about that. And people are acceptable on the right to that for two reasons. One, they hate Biden. Fine. And two, speaking from a capitalist point of view, if he spends the money on adding growth, then it's money well spent as opposed to just, paying off kids' college loans. It's just different approaches. You know how it is, left and right. Different approaches, the same thing. So if if Trump hasn't gotten those things done, he's going to lay it on Powell. He's already blaming Powell for any problems he has, right? Right, and then after a year and a half go by, and we've gotten to 2%. Powell can leave. And then if Trump hasn't gotten what he wants to get done, heaven help us for whoever replaces Powell. That person will be like Burns was for Nixon, or before Nixon. So and after Nixon. So I mean, there you have it. I mean, I think Powell will be stubborn, and for the market is finally allowing him to have an excuse to be stubborn, so
Yeah.
that's it.
So talking about Trump, I saw that you recently did a podcast, and I'm going to just share it here with you and the viewers. And it was Trump's special, Trump's New American Empire Unfolding. I see here the northern colonies, Alberta and Saskatchewan state.
Yeah. If you don't have to click on that, would you like me to share the full picture so it's not
Sure.
I can do that if you like. Do you
Yeah.
want me to, do you want me to do that?
Let me stop this. You can share it.
Okay. So there's the sorry about the top border, but there's the picture, and the picture, somebody had done this picture. The red part was done, and as you pointed out, Trump Tower is in the Greenland Protectorate at the Capitol, right? In the
Yeah.
top right hand corner. And
I
the
wonder if
humor. Yeah, I'm sorry.
golf courses in Greenland. It's not very.
Not very green.
No.
Yeah.
Anyway.
Yeah, the picture was a humorous, probably a little bit of a sensationalist picture. But the idea is that if you look at this through the lens that we've been looking at things for since 2021, and that would be supply chains, protectionism, mercantilism, bullionism, those type of things, this map makes sense. And so in the sense that everyone's pulling in their supply chains, I'll stop sharing so you can
Yeah.
up there. Everyone's pulling in their supply chains, and there's a mandate for everyone in the world, not just the United States. And the mandate is you need to produce more, you need to be able to export more than you import, and you need to operate with less financial leverage, whether it be credit, or hedging in futures markets or what have you. And that's been manifest in things. Another thing that Pulsar said down in 22 was collateral crisis, repatriation of collateral. India takes their gold back. China buys gold, takes their gold back. Gold leaves the U.S. at an alarming rate. Silver probably more alarming when you think about it. But those things create uh, uh, a division of trade. And when you look at that map, uh, it's a geographical difference. You can no longer be working with this country because of your ideological similarities, because we're deglobalizing, we're de-dollarizing, we're decentralizing, we're fragmenting, you know. So um, if you want to look at the relationship with the United States and Europe, there's been a rift there. Financially for some time, but Europe has played along, and I'm including Great Britain in that. Europe has played along with the whole Fed's dollar strength because of the relationship. We'll protect you with our missiles, and we'll have a good relationship. It just works on trade. But now, Europe's kind of fighting for its life, and Great Britain, which is where we pulled our, it's like we pulled the American version of Hadrian's Wall, stopped in the Brent Sea. It's like, this is it. We're drawing our line at Great Britain now. They Brexited, they're with us. And, we're Anglophiles, we're English at the root. And now I hear Trump talking and I say, oh, geez, we're just kind of, pulling the Hadrian's Wall to Greenland now. And like you said, the picture of Trump's tower in Nuke. Am I saying it right? Is it Nook or Nuke?
I think it's nuke. Yeah. It's like
Yeah.
a
All right. Well,
nuclear weapon.
anyway,
It's N-U-U-K, how you spell it.
yeah. The whole thing is, if you want to reshore, if you look at Greenland, the whole podcast was, if you look at Greenland, who's he talking about? Greenland, Canada, Panama. He's basically protecting the United States. Monroe Doctrine meets Manifest Destiny. We're not going to help anyone anymore. Sorry. It's probably penny wise and pound foolish in the long run. But if everyone else is pulling in their reins, then we have to as well. And so the West Coast is protected. We can take a look through Canada and Alaska and Hawaii. The East Coast is protected by NATO. But really, when you think about it, all we're doing in NATO now is, look, I'm speaking for Europe now in this case. Russia has proven, I believe, Russia has proven with hypersonic technology that proximity of NATO missiles does not help protect Europe, And so Europe's got to defend themselves. They've got to get their own stuff together, and they're allocating more and more money to military defense while we're pulling out. And so we're going to move our missiles. Like, it's almost like NATO's going to set up shop in Greenland and say, you know what? I mean, really, that's what you are. In the U.S., I'm not sure if you're familiar with this, but in the U.S., the missiles are in the Midwest, in the flyover states, because we want Russia's missiles to go to our missiles and hit our missiles and just miss our cities, which is hilarious. It's like Greenland signing up to be target practice, and then in the South, we want Mexico to be our own, literally like our bridge to getting authoritarian China influence out of Latin America. So it's a mercantilist, protectionist philosophy that I was much more eloquent talking about in the podcast because it just came out of me at that moment. But the long and short of it is, we're receding from every corner of the globe, and that's a hockey fight over there with Israel. We're not doing what we used to do, and we're not doing anything in Europe except throwing the money to hopefully wear Russia out. Meanwhile, what we're doing is we're destroying Europe, and Great Britain will probably open a line of credit because it's a mess, but it's very similar to, although I wouldn't say it's mercantilism like that, to the time before World War One. Right before World War One, the world was in a major global expansion. It was tech oriented, right? Steamships, oh, look at that. I'm in France and I could get beef from Argentina. That's a big deal back then. And World War I started from deglobalization. And we're in my opinion, economically World War III, and we're trying to make it not get too hot. So anyway, uh, it has to happen, and Trump just loves that stuff.
Yeah, and talking about the UK where I am, you said that the US might keep lines of credit for the UK, but
Yeah,
I'm not too sure unless the current government changes a bit because I also saw that Elon Musk he's been giving out his opinion a lot on the UK, and he even did a poll should the US come and liberate the UK, and
right.
I thought was interesting. But and this guy today, I think it was yesterday or the day before from the Telegraph. He's talking about how Keir Starmer is about to get a taste of his own bitter medicine, and he's saying that he looks really isolated because countries like Germany, they're going to have elections in February, and you could get
Right.
the not far right, but you could get the AFD. People consider that far right, but
Right.
you could get a lot more people. You're getting a lot more people like Maloney and others that are very pro-Trump, but this guy isn't. So what do you think? Do you think he's going to back down and go along with Trump, or he's going to isolate himself? And Vince, I just noticed as well that as this gilt market or UK government bond market crisis has been going on for the last few days, the Chancellor of the Exchequer, who's like the equivalent of the Secretary of the Treasury, she's gone with the Governor of the Bank of England to China. And you kind of wonder why China.
Yeah. I actually have something coherent to say about the China trip. But Starmer, I'm not that familiar with his political, like that's where Tom Luongo will be like, oh yeah, that guy will do this based on that. These are conversations I had with Tom. But I can give a framework that I think parallels what you're talking about with regards to the rise of conservatism over in Europe and the US and everywhere else. But starting with what's her name? Reeves?
Yeah, sorry, yeah, Rachel Reeves, the
Yeah,
chair.
Rachel Reeves. She's going to China. I mean, I think you could frame it cynically and say she's going to China to bend the knee. You could also frame it as Great Britain's looking not necessarily to become part of Europe again, but they want to negotiate for trade. So that's China, right? That's like a the opposite of Brexit. What's it? Remain, right? I guess back in, whatever you want to call it. I mean, I'm not saying that those things will happen literally, but again, in a deglobalizing world, you need more bilateral agreements. And if Great Britain's thinking the U.S. doesn't have our back as much anymore, that's necessary. So uh, people are going to complain about it, but we're talking about existentialism, and we're talking about surviving now. And I don't know anything about the people in general. I mean, I don't even know about Nigel Farage anymore. I mean, I thought he was like completely right wing, and I'm like, what the hell? I don't get it. I have to study up, admittedly. But with regards to the conservative movement, yeah, I'm pretty happy to say that I was on top of this for a long time without monetizing it by being long gold, and that is this. Um, what's going on in Europe, much to their chagrin, is the rise of nationalism. And the rise of nationalism is coming back in this way. Thank goodness it's not coming back in the bad way, at least not yet, as a result of being repressed forever. It's almost Freudian. You can't prevent the return. The repressed will return if it's not allowed to work itself out, and that's what they've done. And the history of Europe, as everything after two major world wars, European wars, they see what nationalism can do, and they're still fighting that battle. What did they do? Esperanza, like everything to dissolve borders. but you never dissolved the language. You never got fiscal unity under the euro, and it's just there waiting to reassert itself. And I'm not even so negative. If you can live with differences, like the Rat Pack, you had a black Jewish guy, you had a white Jewish guy, you had two Italians, one alcoholic. I mean, you have to be able to visualize the difference and appreciate the difference. So it's not the fact that you're French and I'm Italian and he's Bulgarian that matters. What matters is that, the people that are avaricious exploit those differences. Anyway, moralizing aside, you repressed that for so long, and now you look at the world divided ideologically into two halves. And this is where I think this is what's going to help inform me in Great Britain. I don't have an answer yet, but it's like this. The East embraced capitalism without democracy, using China as my focal point. The West went from capitalism to a more progressive, woke, ideological capitalism, including, Brussels, right? So it's Brussels and the U.S. have gone with a more progressive, good and bad, right? Plenty of bad and some good. It's kind of like a trade that just went too far. So we wanted China to become democratic, right? A democracy. And they're like, capitalism is kind of cool, but we're going to do our own vibe, and that's an authoritarian. I think it was actually called, at one time it was called, oh boy, Eastern philosophy production means it's something Marxist, but basically it's like we're going to make state-controlled capitalism work, right? We try to do communism, authoritarian state-controlled markets, didn't work. We're going to do it's kind of like a big semi-opening of a market. So the West looks at that and says, well, let's double down on this whole ideological crap, and we do, but in the end, the East is forcing us to be influenced by them. We are becoming more authoritarian. We have to, because the emperor's clothes are coming off slowly, faster in some areas than others. And the scary thing is they didn't embrace democracy, at least not yet. That's what we want them to do eventually, right? But we're embracing authoritarianism, and that's bad. But the good thing is nationalism is a part of that. You have to take care of yourself. No one's going to take care of you, Klaus isn't going to take care of you, and, Nigel Farage isn't either. So you have to, in Italy, right? Meloni, right? Is that how you say it? Meloni? I'm Italian American. I should know that, right? She's an example. I think Giorgia Meloni is an example of proper nationalism. Now that could easily go to one end, but everyone's all worried about fascism. Fascism is a style. It's not a. Anyway, China's nationalistic. And Europe is nationalistic. You've got to let a little bit of nationalism back in, and so I think Starmer loses. In that respect, from that respect, because I think, look at the Eastern Europe, right? Poland. I mean, thank goodness these people are ideologically Western. Like it's almost like, thank goodness Russia invaded them. Because if they didn't, they'd be like, we'll go with them, because they think nationalistically, they think geopolitically, but they're certainly not going to allow themselves to be invaded. So the Eastern Bloc, or the the former Warsaw Pact, in many ways, not always, right? There's a little bit of dictatorship in there, represents, I think, where we're going. So Great Britain can't be, in between Meloni and Trump and say, we're not going to come to the right a little bit. And I think it has to. Everyone has to tighten their belt, and that's it. Anyway, but thanks for letting me ramble on that.
That's okay. Just a final question before we wrap up with the inauguration. You can hear me, yeah? Sorry. So, Vince, a final question before we wrap up with the inauguration coming up in 10 days and this policy that we're seeing of protecting the United States becoming more isolationist, having a greater, the greater Trump empire, whatever you want to call it. Do
Right.
you see this as uh, helping the U.S. in the short term, or do you think we still have a big financial crisis ahead with all the debt that we're seeing? And yeah, do you think it's going to be smooth sailing, or are we going to have a big crisis and then uh, will the U.S., for example, keep its upper hand in terms of hegemony over China? I mean, I spoke about this like recently because I remember still in the 70s when the US was in bad shape and you had Jimmy Carter. Everyone was saying, oh, this is the end of America. And it wasn't. So a lot of people were writing off America because of BRICS and stuff. But
Right.
I'm not too sure anymore. So yeah, let's end with that question.
Yeah, that's a that's a great question. Yeah, when you were saying the whole in the '70s, I just remember hearing the Kinks song Captain America. Anyway, the point is we were definitely not handling our side of the bargains very well. All right, so try and keep this under a million words. The U.S. has the global reserve currency, even though it's much weaker and much less effective. It's going to allow us to, as an aircraft carrier, turn last. We don't have to be as nimble. And so that's the luxury of incumbency. Now, mind you, that has led to ruin, champions who don't train for the fight. That's basically what the US has become, the champion who's just not training anymore. Um, with the rise of China, uh, assuming that they don't have a deflationary crisis, who the heck knows what's going on over there? But I mean, we've been talking about China's demise for 20 years. I think, well, there's the extremely fragmented multipolar world, extremely fragmented, which ends in world war. Okay, right? And there's the world that we're in where China collapses, or let's put it this way, China bends a knee to us, right? And that remains where that's not going to happen, right? It's just not going to happen because we violated trust, right? We confiscated Russia's money, and no one's going to trust treasuries in their current form ever again. That's just not going to happen, right? It's existential. Uh, and so there's a middle ground, and it's always a middle ground where people are trying to compromise. But I really feel that you're going to have uh, the world will become multipolar. So you'll see a fragmentation of currencies. It's kind of like the euro eliminated multipolarity in Europe. Meanwhile, the dollar's loosening of a grip on the BRICS to the extent that it does is going to allow for a multipolarity in currencies there. So we'll be trading, the whatever the Thai baht in London, eventually, like we used to trade the lira, the Italian lira. But so I think the analogy is a Cold War, right? There's a financial iron curtain that's going up, and that's I forget who said it first, but I know that the guy that I heard it from is oh boy, EF Bullion on Twitter, on X. But to answer your question is, I think we survive. We have to bend or we'll break, right? We have the luxury of bending the least, and by doing that, before the Europe, and I mean the continent, suffers before we do. I don't know where Great Britain fits in this, but Europe suffers before we do. Our mistakes, they pay the price for. And so I think, if you want to really simplify it, in the extreme compromise, Europe is a market that China and the US are fighting to sell stuff to. And your multipolarity is, it's almost Orwellian in a hemispherical sort of way. Um, I think if the US successfully withdraws its empire and retrenches it in this whole new little Trump mini empire, we didn't want to be over there anyway. We only wanted to be in Greenland. Like, he's going to sell it that way. Oh, yeah, we're shrinking. We're shrinking. And if we can shrink and consolidate, then we can own our sphere. Our sphere of influence geopolitically is going to get cut down by a third easily, easily. And we need to solidify our sphere of influence over here. And that means prolonged inflation. That's like trying to buy cigars from Cuba, under an American sanction, or trying to buy jeans in Russia during the USSR. And that means prolonged inflation. That means having to be more self-sufficient, and it means sucking it up. And if we don't, we have trouble. I do think that not Russia, that China and the US have some sort of agreement. They've been working on it for a while. And I look at Argentina as kind of like a coup. Uh, the US needs to go from left to center, right? Not right, it's center. We need to go to center. And in order to do that, we need to prove it to the American population that it works. Look at Malay in Argentina. That's our proof, right? And if you want to look at it in Europe, I guess, I mean, I don't know, who would you say is representative of a successful, conservative, let's say fiscal responsible economy starting to do well? Would it be Italy or would it be an Eastern European?
Would say more Eastern European, even Poland or Hungary,
Yeah,
but not Italy, unfortunately, so far. But
right. Right. Their influence may be rising, but their economy is not rising for sure.
and their
Exactly.
fiscal rectitude in Italy has not never been great. But maybe Germany, if they get a new government in February, more right-wing government, because prior to COVID, Germany was running budget surpluses. Their GDP wasn't great, but at least only because they weren't government wasn't really deficit spending.
Right.
I think it's ironic because during the Cold War, West Germany used to buy their gas from the Soviet Union, and now Germany
Right.
reunified it. They don't buy anything from Russia. So I think Germany could be the big surprise, depending on what happens in February with their general election. That's the way I see it.
Yeah, I mean, industrially, they have the potential. The question is, I mean, like you said, they need the right government because BASF has left there. Volkswagen is talking about leaving there. That's crazy talk. If anyone was going to bail out the continent, it would be Germany in the sense that they have the wealth, they have saved, they've been selling stuff, not buying stuff. Well, now maybe they can start buying stuff from other countries and get the economy. They would be like the neo-Keynesian United States in Europe, but. You're right. I mean, Germany needs to, post COVID, it's almost like they wanted it to happen. I feel like it's a degrowth thing. Anyway, I agree.
Great, Vince. It was really good talking with you, and I wish you a happy new year. I know it's the 10th, but we haven't
Right.
spoken before.
We could do that. It's Happy New Year. Happy New Year.
Thank you.
Uh,
And yeah, hopefully we'll talk again.
Thanks for having me.